Welcome to the FX Pips per Bills YouTube channel. Please do not forget to subscribe to our videos. We have the videos about forex trading, crypto trading. Make sure that you find out the best out of these and you utilize them for you to take informed decisions about these global markets. Make sure that you never take decisions in the markets that are not informed. It will cost you a lot. We also have the www.fxpipspebills.com website. You can find the link in the description below this video, such that you can always visit it again and again for analysis, for signals, and for everything you may need to trade successfully. Now, in today's video, we are going to see on how to perfect press our stop losses. Many people find many problems with the stop loss placement. Their stop losses getting here, hit while in markets. Perfectly placing the stop loss and take profits are very crucial, because if you do not press them right, this is when you are going to face challenges with making unnecessary losses, losing out on trades that you should have made profits on. So today we are going to make sure that we learn how to perfectly place these, such that by the time it is hit, you are sure that it was supposed to be hit. And now today you will see that placing your stop loss requires you to have a strategy you're following, a system you're following, and for today's video we are going to base on the support and resistance. This is a basic strategy that everyone should use, and we have already made a video about it. You can check it out here on our channel, the video of how to draw the perfect support and resistance lines. Press the FX Pips per Bills button down there and you search through our videos. You see that in our videos we have that video explaining how to perfect draw the support and resistance lines. Now for today's case, we are going to see on how to place the stop loss and take profits to avoid making unnecessary losses. First of all, for the case today, we are going to be looking at on our FX Pips per Bills website. Okay. So this is how the website looks like. So you just have to go to your you just have to open your browser and fill in www.fxpipspebills.com. And that is it. So we have to open. When you open, they'll bring you. So of course you have to first like the FX Pips per Bills. This is one way is on how you can use our website to do analysis. If you want to do thorough analysis, guys, and your analysis using the best tools without any hardships, this is how we should use it. For a detailed video, you can also check in our video on how to use our chart. So when you come here on the FX Pips per Bills website, you open on the charts and analysis. The beauty with this website is that you will have to do your analysis. You will have to do your analysis with others. You do your analysis with others, and just in case you would like to publish your analysis on this site as well, it is very possible. So this is the chart. So you can see here you can become a publisher on this website if you know that your analysis is. So you can see the recent analysis where everyone posts, and it will just come here. So you can also always depend on this for you to make informed decisions before you trade. Today being a Saturday, these charts are not active. I'm making this video today on Saturday, so you can just come here to choose a pair which you want to do analysis in here, where you see this arrow, or you can use our watch list here, or you can press, in order to see a bigger view of the market, you can press on this button for it to disappear, such that you can make a more clear analysis. So today I'm going to use Euro USD. if I'm going to use Euro USD, this means that we are going to be, since the market is not active, we are going to be using illustrations. I'm going to be using horizontal lines in this case, and for horizontal lines, we shall be seeing where to place the stop loss and take profits. Let us first draw the support and resistance lines. So guys, now you can see that when you have our support and resistance lines like that, these are just for demonstration. Remember, to draw the support and resistance, you must have zoomed out your chart. So now you can use these buttons here down to zoom in. So let's imagine that we are having that order right there. We are going to assume that we are selling. So let us assume from here. Let me first restore to a bigger view, and I also bring it this here. We assume that this is our, we are going to assume that this is our resistance. And now we got a confirmation from just down here, and we entered our order, this one from here. So we sold. So we are taking this to be a sell order. So if you sold from here, I have said that when you're pressing your stop loss, you should make sure that it is 20 to 30 pips above the resistance, just there. That is reasonable. So you make here also, but before you look at the resistance or support, there are also those psychological bounces that are always within. Now, for example, here, this is not a support according to analysis, but you can see there is a bounce there. It is a psychological level. Therefore, when you're pressing your stop loss, you must make sure that when you're pressing your take profit on that order, you should make sure that it is within the first take profit, should be within those within that psychological region, such that the moment it affects the market again, you shall be able to come out with your profits. The other thing is, when you come down here, you see that you still have the support, the major support. So this is when you can also consider this to be a second take profit. So you can set to take profits for this order. So remember, it was from here. We are considering that it was from here, and then you entered from here. Your stop loss was supposed to be just above here, and your take profit you are supposed to be in this region. So by the time it reached here, you would be out of the market. So you could enter two orders and put one take profit here and the second take profit here. But the moment your first take profit is hit, you must move the stop loss of the remaining order. Of course, the stop loss for both orders should be the same. The stop loss of the remaining order to the entry here, such that in case it turns, you are not making any losses. However, when you are using that method, you should be very careful that you are only risking what you can afford to lose. For example, if you are going to use a lot of 0.5 on one order, make sure that now you are going to use a lot size of 0.25 on each order, such that you maintain your initial lot size. So now you make sure that if you're pressing the take profit for the second order, you make sure that it is above the next support, 20 pips to 30 pips above the next support. And the reverse is true for the buy order. Let's assume that we bought earlier on from this market. We bought earlier on from here. We are putting the red, where we're putting the green line. So if we bought from there, after getting this confirmation, and we bought from here, you have to make sure that your stop loss is 20 to 30 pips below the support area. So if that is our support is at 1.677, we are going to make sure that our take profit we are going to make sure that our take profit is at 1.65. That's where our stop loss is. So make sure that our first take profit is going to be in the psychological region, and see that it would have already been hit. And our second take profit is going to be with the 20 pips below the next resistance region. So when you're using this method, you should be careful. If you do not see a psychological region around that is not a major support or major resistance, you should always enter one order to avoid losing unnecessarily. However, if you want to get consistent with entering two orders, making one have what first take profit and the second one have the second take profit, you should just get your lot that you use on one order and you split it and then use it, you divide it by 2 and use it for 2 orders. For example, if you are going to use a lot size of 0.5 on one order, now you have to make sure that you split it and use 0.25 for each order, but having different take profits but the same stop loss. You will still be risking the same, but you will not be getting the same. You will risk the same amount that you would have risked on one order, but you will be earning more than you would have earned on one order. That is true. So we also use this at sometimes to enter more orders such that we can maximize our take profits. So when you are doing that, just make sure that everything is set well. And for more videos about on how to trade, which methods to use, please always visit our website www.fxpipspepips.com so that you can always get the best analysis before you take your trading decisions. We do not encourage you to trade alone, of course. We encourage you to always take informed decisions along with others. Therefore, every time you get subscribed to our notifications on the web www.fxpipspepips.com, use those charts to do perfect analysis. The beauty with our charts is that you'll have to zoom up to any zoom out and in at any time up to any amount you'd like. For example, as you can see here, that when you use our chart, you can come here, you zoom out, you can see you can really zoom up to infinity, up to when that pair you can really get good data. They are very flexible. You can come here and you fix them vertically. You can just double click and then move them so that you can do that perfect analysis that can qualify that of the professionals. Remember, when you are using this website, you also when you go down here, you see the analysis from other traders. This also helps you to make good decisions on your analysis. Thank you for watching. Click for the next video and also do not forget to subscribe.